You might be wondering, will the housing market crash if interest rates go up? And in this video, I'm giving you the answer. As many of you guys know, interest rates right now are at an all-time low, and this is a big motivator for so many home buyers who are trying to buy houses. If you've been anywhere on the news, you know that house prices are so expensive, so competitive, and there's barely any supply. In today's market, what home buyers are doing is they are buying a mortgage payment, not a house. What this means is nobody's even looking at house prices anymore. They're just looking at their interest rate, their monthly mortgage payment, and they're saying, I can afford it, let's go place an offer. Now I'm gonna give you an example with some numbers to break it down for you so you can get some perspective on what's gonna happen if interest rates start to creep up. And just so you guys know, just the other day, the market thought interest rates were gonna go up and everyone was going crazy. So yes, if interest rates start to go up, things are gonna get wild. Wild meaning bad. Like a crash bad. Like a massive dip in the housing market bad. Bad. Anyways, here's the number breakdown. If today you are buying a house for $300,000, the average interest rate is 2.8% for many home buyers who are currently buying houses in this market. Your monthly payment on a $300,000 loan at 2.8% interest rate will be $1,233 every single month. Now, I gave this example in another YouTube video that I made. I'm gonna link it up top for you to check it out. And that video is talking about why are house prices so expensive. So when you finish this one, go check that one out. Now in today's market, you're gonna be paying $1,233 every single month on your mortgage for a $300,000 loan. Now let's just say interest rates started to creep up. And let's just say they became 5.5%. That means the interest rate will be up 2.7%. If you watch some of my YouTube videos, you'll know that I share with you for every 1% the interest rate goes up, 10% of the housing market values go down. Of course, this is plus or minus depending on your markets. So now that $300,000 loan at 5.5% interest rate, your monthly mortgage will be $1,703 every single month. That's a difference of $470 every single month. That means that your net worth is gonna go down every year $5,640. Now that's not a little bit of money. $470 every single month could be used in so many other things rather than paying a heftier mortgage. You can take that $470 and get a really nice car with it. You can go and pay insurance for your cars. You can go and shop with it. You can go get food with it. You can do so much with $470, but that's what will happen if interest rates go up. Now check this. To get the same mortgage that you are getting at a 2.8% interest rate, to get the same $1,233, you're gonna have to shop for homes that are cheaper. Now you might be asking, how much cheaper, Karam? How much cheaper am I gonna have to buy a home if interest rates really went up to 5.5%? If you were going out tomorrow to buy a home at a 5.5% interest rate and you wanted it the same monthly mortgage like you were getting at 2.8%, you're gonna have to get a home for guess how much? $217,000 if you wanted to match that same exact monthly mortgage that you would have had if you got the rate at 2.8% rate. That means that you had to go shopping for a house $83,000 cheaper in order to get the same exact monthly mortgage that you would have got if you got the rate at 2.8%. Now guys, what this is saying is if interest rates start to go up, you're gonna expect to see home prices start to go down. And when we talk down, we're not talking 5,000, 10,000, 20,000. We're talking, like I just said, $83,000, especially with this current market of everybody who is not buying a home, they're buying a mortgage payment. Like I explained in the beginning, people are putting in the calculators, I wanna pay this much every single month, this is the interest rate, this is how much the monthly payment's gonna be, and they're happy. They're going and buying a $600,000 home according to that interest rate, but what happens when the interest rates go up? House prices are gonna have to come down. So for those wondering, will the housing market crash if interest rates go up? There is a high chance. And when we talk crash, we're not talking 2008 crash. We're just talking about standard market movements of interest rates going up, house prices will have to go down. Now, with everything going on, forbearance extensions, tenant relief programs, so many things with supply being low and demand being high, construction costs being at an all-time high, there's a lot of moving factors, but the interest rate is one of the biggest moving factors, and I hope that that made it clear for you on how important interest rates are and how scary they could be if they start to go up. Anyways, thank you so much for watching. If you enjoyed this video, make sure you hit that subscribe button. I upload 3 times a week. I talk real estate, money, and business, and you don't want to miss out. I'll see you guys in the next video. I'm out.